and the two proposals identified by future Chancellor Merz, if all that was to work, it would certainly have a fiscal impact, which itself would have an impact on demand. So we will have to take that into account and factor that in. But I don't see that as related to our monetary policy, because our monetary policy, as you know, provided under the mandate that we have under Article 127 of the treaty, is price stability. And we're going to really adhere strictly to our mandate of price stability. We are attentive to transmission. We are attentive to underlying inflation. We are attentive to the inflation outlook. And all of that is informed by a large amount of data. But, you know, if your question is intended like, would you not participate in a financing effort? This is not the purpose of the ECB, okay? There's a European Investment Bank. There are multiple institutions whose actual purpose it is. Our purpose, our mandate is price stability. On your second questions...
whatever it takes.
Yeah. Geopolitical risks, on the one hand, determination by policymakers on the other hand. So it's really something that is in their hands, and because it will contribute to boosting the European economy, because hopefully it will be a source of innovation. Typically, investment in defense are a source of innovation. Therefore, will improve productivity. We are very attentive to that, and we are hoping that it will have those impacts on the European economy. Is it a whatever it takes moment for the German economy? It's not for me to say. It's for the political leaders to appropriate that expression. Thank you.
And now Isabella Bufacchi of Il Sole 24 Ore. Isabella, please.
Thank you for the opportunity. President Lagarde, I have two questions. The first is on quantitative tightening. The ECB has been carrying out QT for quite some time, and if I can use your metaphor, it is a bit of a cold water, I think, in the flows. And so we had TLTRO's repayment stopping, and then the holdings, their investments of APP and PEP. So QT has been continuing during the interest rate cut cycle, and it is taking place now together with a kind of a market tightening, the sharp rise of long-term yields of government bonds. So is the Governing Council taking into consideration or quantifying the impact of this QT on its monetary policy and this meaningfully less restrictive monetary policy? And then my second question is on digital euro. Because the Trump administration decided to stop the Federal Reserve's project on central bank digital currency. And it looks like the Fed might be on hold on digital dollar for about 4 years. And so it looks like a kind of a golden opportunity for the ECB and the plans of the digital euro. What is the position of the ECB on these issues? I mean, these changes also from the United States, and how can the ECB push forward with the creation of a digital euro? Thank you.
Thank you very much for your two very different and both important questions. So you are perfectly correct in that we have stopped reinvesting quite a while ago now under the APP. We've stopped reinvesting gradually over the course of time under the Pandemic Emergency Purchase Program, and all TLTRO reimbursement have now been refunded. But this is a process which has taken place very smoothly, which has been absorbed by markets in a very innocuous way over the course of time. Now, we don't regard that as a component of our monetary policy primarily. It's operating on the back burner, if you will. It has been telegraphed very early on. We have anticipated, communicated to markets so that it happens in a very, very smooth and gradual manner, which is what we are seeing. The main monetary policy instrument that we have used recently and that will be the driving force is interest rate, not QT or otherwise such financing program. I know that, we have to calculate everything. So we do calculate, we do try to work with counterfactual, and you well know that my dear colleague Piero Cipollone has tried to assess exactly how much it contributes or not, and this is something that he has had calculated. But it's not our key instrument, and it's really not perceived as having a significant impact. On your second point, I tend to share your views. Nature doesn't like vacuum. And we started working on the digital euro way back. Actually, when I started my term 5.5 years ago. And I'm not claiming, parentality on the digital euro, because my colleague Benoît Cœuré had already committed a speech on this matter before I arrived. But I certainly carried on with that project, and subsequently Fabio Panetta on the board and then Piero Cipollone, who has replaced Fabio, have taken the lead together with a very, very good team which is focused on accelerating the pace and hopefully campaigning enough with all the stakeholders, meaning European Parliament, meaning European Council, meaning European Commission, so that we can eventually, not put to bed, but put to reality this digital euro. The deadline for us is going to be October of 25, and we are getting ready for that deadline, but we will not be able to move unless the other parties, the stakeholders, as I call them, Commission, Council, and Parliament, actually complete the legislative process, without which we will not be able to move. And I think it is critically important, and it seems to the agnostic or the skeptics, it seems to be more relevant and more of an imperative now than ever before, both on the wholesale and on the retail level, both.
And Andres Stumpf of Expansion. Andres, please.
Thank you. Could you guide us a bit more around today's discussion and the consensus and frictions? Do you see more diversity of views regarding the current economic outlook or regarding the medium-term outlook? And second question, after what we have seen these last weeks, do you still believe that negotiations are preferable in relation to tariff and commercial war, or has Europe to show somehow some strength? Thank you.
My personal
your personal view. Yeah.
My personal view is that you have to negotiate from a position of strength. So one thing leads to the other. And that's the hope that I can formulate, because we know that tariffs, and particularly if there is retaliation, are not good at all and are net negative on pretty much all accounts. But that's my personal view. Although I think we around the table of the Governing Council, we all agreed that it was net negative when it happens, and it's even negative before it happens, because the uncertainty that is generated and the undermined confidence that results from just the threat of those tariff increases and potential retaliations are putting a brake on investment, on consumption decisions, on employment, hiring, and all the rest of it. What can I tell you about the discussions? We had quite extensive, intense, lively discussions, but I don't think that we can draw a line between the short term and the medium term, because obviously what is the developments that we are seeing at the moment, because of how they will transform the outlook, because of the impact that it will have on our societies as well as our economies, both in terms of growth and in terms of inflation and in terms of employment, and in terms of transformation of Europe. Those are significant changes, essential changes, that we are witnessing and for which we have to account to help making the best and the most appropriate monetary policy decisions. But everyone was very engaged, as you can imagine.
That concludes our press conference today. Thank you very much for following us. Our next press conference is on April 17. Until then, all the best. Thank you.